Hello everyone, my name is Advaith and welcome back to my YouTube channel. So last week I announced that I'm going to a business trip and I won't be able to record the videos. So I'm back again in California and I had some little bit of cough and cold, a little bit of health issues, but finally I'm healthy and I'm back now. So you can expect from now onwards more frequent updates on day-to-day basis. So without further ado, let's talk about the markets. So as you guys know, I trade primarily NASDAQ markets. And before I was gone, there has been a lot of event that has been happening, in my absence. So I just wanted to give you a gist of, where we are, and I want to discuss my updated market views and my analysis. So without further ado, let's jump on right into the analysis. So as you know, since last November, almost at the end of October, we had a blistering rally. And the rally was so strong and people were, trying to analyze, okay, where the trend reversal is going to happen, when the markets are going to reverse. But again, we only trust the charts and data until and unless that tells us otherwise. I don't, frame a contrarian view. So I will show you all of that. So as always, let us start by analyzing the weekly charts. And I will show you what happened and what is going to happen in the best possible probability approach. So let's jump on to the weekly charts first. So in the weekly charts, I wanted to discuss two important things. One is we perfectly got rejected from the top of the Bollinger Band. And second is this is the fifth straight week if we close in green. So 5 straight week in green is very, very rare. So let me show you what I mean. So if I go to my weekly charts, that is this one. So in these weekly charts, as you can see over here, in the late October, we perfectly had a support of 50-day moving average. That is this cream line that you see over here. And since then, it is 1, 2, 3, 4, and this is the 5th week. So if there are 5 weeks in consecutive green candles on a weekly time frame is very, very rare. So if you can see over here, there are very few instances wherein we have closed 5 consecutive weeks in green. So right now it's Wednesday and we still have 2 more trading sessions, and I highly suspect that we may not close green on this week. Secondly, if you see over here, we got perfectly rejected on the top of the Bollinger Band. So this is the weekly Bollinger Band and we perfectly got rejected at the top of it. So we have long wicks. So over here, you can see that this is a long wick, this is a long wick, and even right now we are forming long wick as of today. So these are the two important, observations that we are rejecting from the top of the Bollinger Band. So on the weekly time frame, what is the immediate area of support? That immediate area of support is the 5-day moving average that you see over here. So if we, let's say, tend to close the week in red, then what is the main area of support of stopping or the prices should retrieve is over here, that is 15,720. So almost around here, it's the first level of support on weekly time frame. So these are the two main observations that I did on weekly time frame. And now let us go to the daily time frame. So in the daily time frame, I wanted to discuss few important points, and those are these. We are right now stuck in the range since almost 2 weeks. That is the start of the Thanksgiving week and until today. And we are also creating, unusually long wicks in this range. We are also consolidating since last 2 weeks, and every time we are trying to go down, the 5-day moving average is acting as a support. So let me show you all of these points in the chart. So this is my daily time frame, and the daily time frame chart is looking something like this. We reached the R2 level, that is the daily R2 pivot level. And after reaching there, you can see we are just consolidating in a tight range. So if I just show you this range, then this is the range that we are constantly being chopped off. So after reaching R2, we are just going sideways. And so this is one point. Second point is, if you see after reaching this level, we are creating, unusually long wicks. So this was a long wick, this was a long wick, today was a long wick. So these wicks suggest that the buyers are trying to go above, but there are a lot of sellers sitting over here creating the long wick by selling the positions. So over here, the overwhelming majority of the market is not, finding the market prices appropriate enough so that they can buy. So that is why the selling pressure is high over here. So in this consolidation, just by looking at the candlesticks, if you ask me that who's in control right now, so right now the sellers are in control. But the main point over here is in technical analysis, the moving averages act as support and resistance. So if you see over here, every time the bears tried to sell or the bears tried to move the market down, the 5-day moving average acted as a support. So let me show you what do I mean over here. So if you see this plain blue line, that is the 5-day moving average, every time the market touches or encounters the 5-day moving average, the market bounces from that level. So if you see over here, it touched the 5-day moving average, bounce. It touched the 5-day moving average, bounce. Touch the 5-day moving average, bounce. So we have yet to be seen a day wherein we have closed below the 5-day moving average, because 5-day moving average is the shortest term sentiment. If we are not able to close below the 5-day moving average, then there is no point in going short. So if the market, is supposed to go down, then the first thing that it needs to do is to devastate and destruct the 5-day moving average. Only then we can have a chance of testing the other moving averages, which is below it. So my conclusion on the daily charts is, as we all know that the month end is very, very near, and the pivot levels are going to get refreshed at every new month. So this R2 level is going to get refreshed. Also, remember that the next month, this white line, that is the anchored VWAP, even that is going to, get refreshed. So as of now, what I think is the main area of support that I can see over here is 15,600. That is the 26-day moving average. And always remember that do not short on intraday if you don't see the market building and staying below the 5-day moving average. So as of now, we are just chopping around. Now, there may be multiple reasons of why we are doing this. We had a blastering rally since last month. So markets normally tend to digest, huge moves. So whenever we have a huge move in the market, there are a lot of consolidation days suggesting that the markets are digesting the gains. So after this consolidation ends, the market can, be on the rise again, or it can be on the fall again. But we need to wait until the consolidation phase, is over. So without, waiting, there is no point in, forming a view of the market for bullish or bearish. Let the price action dictate what we need to do. So we as traders are supposed to behave, responsibly. And when we are responsive and when we are not reactive, that is when we wait for the confirmation. So wait for the confirmation, see how price action reacts, see how markets react on a macroeconomic level, because we have a lot of, data coming out in December. We have inflation numbers, we have job numbers, a lot of, economic data coming out. So let the markets decide what it wants to do. Until then, in this consolidation period, we are sitting on the sidelines and seeing the price action, because right now we are bullish. To be honest, right now we have not even closed below the 5-day moving average. So there is no point in, thinking that, okay, there will be a very big red day. Even if there is a 2% red day or a 1.5% red day, that will bring us down to the, green line, that is the 13-day moving average or the 26-day moving average. So until then, there is no point in going short. So let the price action decide. And on the daily time frame, this is my view. And if you ask me if there is a pullback, then how deep it will be. So the answer to that question is either the maximum depth of the correction or the pullback you can expect is the 26-day moving average or the 50-day moving average. That is the max level of correction that I see or that I feel that is going to happen. Why am I telling this? Is because remember, we are entering into a very strong seasonal period. So even if there is a big correction, then that big correction will stop either on 26-day moving average or 50-day moving average. So until and unless those levels are achieved, I would not be a heavy buyer. So if the price reaches to this level, that is the 50-day moving average, I would be a heavy buyer. So that's my view on daily analysis. And now let us go to the intraday analysis. So let's talk about intraday time frame. So I wanted to highlight few important things regarding the intraday time frame. In intraday, we perfectly got rejected on R3 level, that is the pivot level of the R3. We also got rejected from the R1 hourly level. So let me show you what I mean. So over here, you can see this is the 5-minute chart and this is my intraday chart. Now in this 5-minute chart in the intraday, you can see over here, we started on 6:30 Pacific time. And after the start, we got a very big bullish candle, that is 40 points. And we actually started on R2 level. So once we got that bullish candle, we just consolidated near the R3. So this is basically the R3 level. Now, the thing is, when we start at a R2 level, we are already like starting at a resistance level. So the next resistance level is R3. But as I always tell and as I always say that the first half an hour or 45 minutes of the market, let the market do its thing. The reason why I'm saying this is because according to my experience, the markets tend to reveal its real direction after 30 to 45 minutes of the trading session once they have trapped all the retailers. So this is what I think. And the reason why I'm saying it got rejected from the R3 level over here is normally what I do is this is the futures market chart, right? Nasdaq futures. And I also track the QQQ, that is the ETF that mirrors the Nasdaq index. So we got a perfect rejection from the R3 level from the QQQs. So this is why I see over here, I keep a track of both assets, because normally what happens is if we have, so this is the cash market, that is the cash segment, equity segment, and this is the future segment, that is the derivative segment. So many a times the levels that get respected can also be on the equity side. So if there is a big resistance level over here and we are being rejected from the equity segment, that is the QQQ, then we also need to know that we may not go higher because we got rejected from the QQQ level. And this is the perfect day why I am showing this, the reason because I track both assets to know which level is going to get respected. So it is very important to know, like the correlated assets like QQQ, if they have some important levels, then I need to be aware even if I'm trading the futures market that comes under the derivative segment. So you can see over here that we perfectly got rejected from R3 from the QQQ. So I wanted to show this. Also, after the 7:30 or after 7 o'clock, when all the news and everything, if you can see over here, we completed all the news, related to the crude oil, related to the wholesale inventory, everything was silent after 7:30. So after 7:30, we actually were really bearish. But what was the indication, or what can we take it? What is the learning that we can take? So over here, you can see after 7 o'clock, that is exactly after 30 minutes, the markets actually created a very big red candle that is of 32 points. You can see over here, if I bring my cursor over here. So after this red candle and after this crossover, that is the 5-day crossing 26-day from the top, that means this is the bearish crossover. So once that happened, we came to the conclusion that, okay, today the theme of the market is going to be bearish. Why? Because we got a perfect bearish crossover. So after that, I was looking for a short entry. So I shorted around this level just exactly after the crossover. So what we did is we perfectly chopped around. So if you can see over here, we took the support of 200-day and then we again tried to rally. But again, as I said, the daily perspective, we were bearish. So from the daily charts, I knew that only if I get the bullish crossover over here, only then I was supposed to go long. So once we got rejected over here on the 50-day, I again shorted. So once we achieved this level, so I didn't stay in my position till here. I just cut my position for 15 points today. But the reason why I'm explaining this is because on the intraday time frame, we also have to know that by this time, that is 8:30, the only big news that we had that could have been bring down the markets is the Fed speaker and the beige book. So the Fed releases its beige book, probably a lot of times in a year. So this could have a big impact. So I was waiting for the release of the data of the beige book, and if the beige book announcement that is on 11 o'clock, if even if that cannot bring up the markets, then there is a lot of scope or room going short. So as you can see, after 11 o'clock, the markets did not had a bullish crossover. And once it got rejected, I again shorted. So today the theme was shorting on an intraday basis. As you can see, also on the basis of moving average, also on the basis of rejections from the QQQ. And one interesting observation that I did on the volatility index that I wanted to show you is over here. So you can see that this is a daily chart of the volatility instrument that I track. Normally, if people trade S&P 500, they track the VIX, but I trade Nasdaq. So I track the volatility instrument that is linked to Nasdaq, and that is VXN. Over here, you can see VXN. So I track VXN, and this is the daily chart of the VXN. And what do we see over here? We see a constant decline. And also we see that on the daily chart, VIX is making long VIX over here. That is long, buyer sentiment. And also on the closing basis, it is taking support at S2 level of the pivot. So I knew that on the daily level, it is taking a support. So there will be a lot of volatility on the downside. So this was also a very big indication that we, had a short entry day today, and the theme of the day was negative. So these are the data points that I look into while I'm taking the intraday trades. I will also share my other insights like order flow tools and tick charts. Right now I'm sharing the time-based charts. I also intend to show you the tick charts and also the footprint charts. Don't worry if these terminology is not familiar to you. I will explain it in my education series very shortly. So now since I'm back, I'll have a lot of time creating those tutorial videos. So until that, this is my take on intraday basis. So lastly, I wanted to discuss some macroeconomic events that are this week. So this week we have ISM manufacturing numbers that are going to be crucial. Also, we have PCE numbers, that is the Fed's preferred inflation measure. So this PCE numbers is basically Fed gives more importance rather than the CPI, that is the consumer price index. So these two, big news events are going to happen this week, and it may have a major impact on markets. And last but not the least, our boy Jerome Powell, the chairman of Federal Reserve, is going to speak this week. So during his speech, expect a lot of volatility. So apart from that, there's no much big thing in terms of macroeconomy is concerned. So this is what I wanted to discuss. Like if you are a day trader, you may want to keep a very close eye on these events and refrain yourself from trading during these news data releases so that you don't get off guard and your stop losses doesn't get triggered. Apart from that, these two Thursday and Friday sessions are going to be very usual. But yeah, for those of you who are trading, day trading, these are the events that you need to consider. So I know this is a long video, and I would just like to say in the end that thank you very much for viewing. And I hope that you are learning a lot of things, you're getting a lot of insights, and you're making informed decisions. So I always say that keep learning, keep growing, and keep trading. And with that, I would like to conclude, and thank you so much for viewing. Please like, share, and subscribe.